Better to buy a home in cash or take a mortgage and invest the cash? So basically I have enough saved 350,000 so that I could buy a decently nice home in straight cash and have no mortgage. Of course I could also buy with a normal down payment and mortgage and continue to invest my cash as I have been. X200B. Which would be a better option over the medium term? Approx 3-5 years. It depends what the mortgage rate is. When you could get a 15-year mortgage for 2.75, it was better to get the mortgage and invest the money. Even by pretty conservative estimate, your return over 15 years would be over 3 on your investments if you did broad index type funds. If your mortgage is now 7, well, will long-term returns beat 7 after taxes? Who knows? It might be prudent to go with the guaranteed 7 returns and pay cash. I can only speak for myself, but if I lived where I am now and could buy a home in all cash, I would take that route considering interest is about 7 right now. I would do 50 down. Along with what others have mentioned, the interest you pay on mortgage payment is deduction on your taxes. If you got, let's say, a car or another loan because you didn't have any money left after paying the house 100, that loan interest won't be deductible. Buy in cash with today's rates. Whenever interest rates come down, you can always get a credit line if you want that would be better than mortgages and fees now. This doesn't have to be a binary choice between straight cash or a full mortgage with 10-20 down. You could just increase the down payment to something like 40, which will lower the payment and leave you with $210,000 to invest and further contribute to. You could also put down 20 at least and avoid PMI and also reduce the mortgage and invest the rest. I think it's important to ask, why do you have that much cash? Are you still going to want to have that much cash? Or if you have that $350,000 invested, how much capital gains will you have to realize if you liquidate it to buy the home? 7 saved is better than 7 earned, since the 7 saved is all yours while 7 earned will be reduced by taxes. Depending on your answers to the questions above, buying a home in cash might make sense. Not sure why you're getting downvoted. The peace of mind you get from a bank not owning your home is underrated. Are you saying you will sell in 3-5 years? If so, the best option is to rent. A safe bet in today's market is 50 down. You'll get a solid rate, and you'll still have plenty to invest. At the very least, you're closer to breaking even. Here's a controversial idea: it's good to always be in some amount of debt. Make other people's money work for you and share some of the risks. That's called leverage. Rich people do it, poor people do it, companies do it, countries do it. The whole world's economy is driven by debt. You have to be careful and not overextend, but I doubt you're doing that. You don't have to do either or. You could do 50 down and invest the rest, 60, 70, 40, whatever. I would do some combination, and, at 7 interest, 50-50 seems like a good place to fall. I think there's always the option of refinancing your house if when rates decline. If it's the home you live in, no matter how the numbers play out, there is a peace that comes with walking on grass that you, not the bank, owns. Others have spoken well enough about math. It depends on how much the home costs. If it's much less than $350,000, then okay, just buy. If it's about $350,000, then no, it leaves you no money for repairs, emergencies. Put 50 down as a compromise. You could get a fairly safe 8-10 yield from lots of different dividend stocks, ETFs, EFs. I'd pay cash for the house and then budget a commensurate mortgage each month to invest. Interest rates are too high to justify your other option. Buy with cash, invest what would have been your mortgage monthly. I had enough money to pay for my first home in cash. I put down the minimum to avoid PMI instead and purchased a rental. Then I did more and more as I gained experience. Then I branched out into other investments. 15 years later and I'm very close to retiring early. Poor people pay off debt. Rich people use it as a tool. Never underestimate the time value of cash. Paying off your mortgage almost never makes sense. It's always better to put that cash somewhere else where getting access to it doesn't mean putting your home at risk. Then you lose leverage. I would buy the house outright and then invest all the money you'll save on mortgage payments. Dude, buy the house. It's an amazing gift you've given yourself. The ability to outright pay for a dwelling that you could be in for the rest of your life. Bravo. Bitcoin. You don't want to miss the upcoming bull market. If you're in the US, there are also tax advantages of having a mortgage, as you can deduct mortgage interest from your income for mortgages up to $500K-ish. When I bought my house 2BR, 1 bath, 1,100 square feet in September 2010, I received mortgage rate quotes ranging from 4.6 to 5. Decided to buy the house outright for $37,500, originally listed for $47,500. Seller fell behind on his mortgage payment, and I took the opportunity to own my house using the cash I had on hand at the time. Haven't looked back. I would invest it if you think you can beat the mortgage rate of 6-7. If you know what you are doing, I am sure you can make more than 7 per year, and be better off than paying cash. I wouldn't go crazy though, 40-50 down, or more if you like, and invest the rest. I would go conservative and invest about $150K if it was me. Buy in cash. Always cash. You're going to be happier. Why is this even a question? You're asking whether you should take a loan at 7 and invest at 5, losing money, or alternatively, buy a house in cash and not lose money. Current mortgage rates are 7.3, if you have, say, a 24 tax rate, that requires a 9.6 guaranteed return to match. It's pretty hard to justify not buying in cash or paying off a mortgage at that rate. Buy the house cash is the best option. Emo, if interest rates were 2-3, I'd have done a 50 down and ETF the rest of the cash. To me, there is no question. Putting 20 down and putting the rest in SP is superior. If you only intend to stay somewhere 3 years, I would not even buy a house to begin with. I would just rent. There is a very high chance that the transaction costs to buy-sell a house will put you net negative over such a small time frame. Don't pay in cash. Invest it unless you think the market really doesn't yield more than 6 per year. Spoiler, it does. Plus, if rates climb higher, that's all the better. You can invest in short-term bond funds that'll beat the interest rate you have locked in. Invest the cash you could buy STEM and double your money in 24 months. Here's a thought that I haven't seen in the other comments. Use the $350K as a down payment on a multifamily house, 2 or 3 units. Live in one and rent out the other units. Invest the money. Get a loan with lower rate using the investments as collateral. Then, since the home isn't collateral, use the home as collateral for another loan that you invest. This is America. Debt makes you rich here. With current mortgage rates, it makes more sense to put as much down as you comfortably can. When it was in the high 1s to low 3s, it made more sense to put as little down as possible. Buying a home with cash dramatically reduces the chance that you lose your home. I am a fan of it, regardless of the theoretical foregone gains of owning stock. Put yourself in a position of FU, then invest your savings after that. My personal opinion. Lots of buy cash recommendations which make sense, but make sure you don't spend your entire savings on it. Keep a healthy emergency fund, because once you own a house, the potential emergencies you may face increase dramatically. It may mean taking a small mortgage, but could also be the difference between having made a wise investment and facing financial ruin. The question here is, can someone foreclose on cash? If you ever get in financial trouble? On a mortgage they can.